Well, as we head into another result season, here's a look at what to expect from base as well as ferrous metal players in India. The base metal companies are expected to report, a quarter-on-quarter rise in domestic EBITDA. That'll be driven by operating leverage and a modest uptick in aluminium prices. In contrast, however, the ferrous metal players like JSW Steel, Tata Steel, they're likely to see EBITDA contraction this quarter due to weaker domestic pricing. Sales volumes are largely strong, though, across the board, be it for JSW Steel, Jindal Stainless, Tata Steel India. However, Hindalco as well as Novelis volumes, well, they are expected to remain more or less flattish. They have been impacted by that fire incident. Well, steel margins as well, they have come under pressure this quarter as India HRC prices declined by close to around 4% on a quarter-on-quarter basis in the second quarter. That is despite the 5% rise that we have seen in China's export HRC pricing. Well, this has widened India's, discount to landed Chinese imports to nearly around 8 to around 10%. So now the street is optimistic that we can see some price hikes here in India. That we'll discuss a little bit later. But though while steel prices have dipped, well, the fall in margins is expected to be partially cushioned because coking coal costs, they have been well behaved. There'll be some element of operating leverage as well that will play out, particularly for the larger players. That said, the EBITDA per ton is likely to contract sequentially for key names like Tata Steel, the standalone business, JSW Steel. Novelis as well will face headwinds, and so its EBITDA per ton will decline to around $430 per ton, as it will be impacted by doubling of the US tariffs, the fire incident as their Oswego plant. That will hurt the supplies as well. And there have been various supply disruptions to the key client, case in point being JLR as well. On the other hand, Hindalco's India business should benefit because aluminium prices have moved up. The EBITDA per ton could scale around $1,650 per ton. Valuations for the sector, well, they appear more or less reasonable. Hindalco as well as Tata Steel offering a balanced mix of growth as well as margin stability. But as we look beyond Q2, here are the three key aspects you should be keeping your eye out on. Steel realization and cost guidance going to be important out there, especially post the recent volatility we have seen in pricing. The volume growth for the remainder of this year with multiple companies ramping up capacity. And what's the status with regard to the expansion projects as well, particularly in the downstream as well as the value-added segment. As always, we'll be watching for the earnings, the announcements, and the management commentary as well. Well, let's welcome on the show Amit Murarka, the research analyst at Axis Capital, who joins us. Hi, Amit. Good morning. Thanks a lot for joining in. Always a pleasure talking to you, Amit. Tell us, what are the expectations first in terms of the ferrous pack? And do you think there's a good case, given that domestic pricing is at a discount in comparison to imported steel, that we see some kind of price increase?
Yeah, hi. Good morning, Nigel. Good to see you again. So, you're right. The domestic pricing has been quite weak in the last 4 to 5 months, particularly because of multiple factors. One was obviously monsoon. So what we are anticipating is that given there's a push and the pull hitting steel prices, with China kind of seeing a moderation in export pricing, we would think that Indian prices should overcome that and start improving in the coming months, largely because of support from the Indian safeguard duties of 11-12%. So currently, it's a 3 to 4% discount to import parity. Usually, it's a 5% kind of a premium. So that itself calls for a substantial 7-8% improvement, which is what we are building into our numbers in the second half of the fiscal year. So while Q2 will be weaker, particularly for Rebar players like JSPL, we are expecting Q2 and Q4 to be much better from a pricing and margin perspective for the sector.
Okay, got it. All right. So expecting the next couple of quarters. And I missed that number. What is the price increase you're working with?
We are working with about a 7 to 8% increase for the second half.
Okay, got it. All right. What about the spreads? Do you think the spreads as well start improving from here on? Because coking coal costs more or less well behave, operating leverage will kick in, as well as, prices will improve. So if you could give us a comparative number for the past quarter, how were the spreads and how do you see it improving?
Yeah, so pricing and spreads go together. So pricing has come off close to 4,000 on an average for Rebar and HRC combined, and spreads to that extent have also gone down by a similar number raw material has generally been kind of flattish in the last few months. So essentially, we are not expecting much of a rise in raw material. Like you all know, there's a big supply of iron ore coming in from Simandou starting now, and will keep ramping up over the next 1 to 2 years. So iron ore is expected to kind of stay a bit subdued, and coking coal though kind of tends to move up during November, December due to the Australian typhoon season. But beyond that, we would expect raw material prices to not kind of move up much, and the price improvement essentially translating into spreads improvement. So that would be close to 4,000 per ton kind of improvement by Q4.
Okay, all right. Amit, what about Tata Steel? You know, because on a sequential basis, because you have that seasonality factor, most of the ferrous names will report some kind of, a dip in terms of profitability. But for Tata Steel, they have the European operations out there, and that will turn around to a large extent. Do you think there will be better times ahead for Tata Steel Europe in particular, both Netherlands as well as UK? And in that case, would you start getting optimistic on Tata Steel, or do you prefer the other couple of stocks in the ferrous pack?
Yeah, so I think more importantly, the European Union and the European Commission has proposed a new steel and metal action plan, under which they're looking to essentially get into protectionist mode. They have proposed a quota cut of almost 40% for HRC and 47% overall, as well as a doubling of tariffs from 25 to 50% post the quota limits. So essentially aligning with the US quota, US tariffs. I think that, if approved, it has to still go to the European Parliament. But if approved, that could actually lead to material upsides for European steel prices, and that essentially should benefit Tata Steel. So we had worked around the sensitivity kind of that if there's a $50 improvement in the European steel price because of this, Tata Steel could see a 10% improvement in PAT, and that could kind of mean like a 5 to 10% increase in the SOPP valuation as well.
Okay, all right. But in steel, your preference is JSW Steel as well as JSPL. Is that correct?
Yeah. So while the prospects of Europe seem to be improving, we are a bit worried for Tata from the Indian business perspective, largely for two longer-term factors, not necessarily next 12 months, but one would be the iron ore lease expiries in 2030. Majority of their, in fact, the entire standalone iron ore reserve is going for auctions. And as we know, the auction prices tend to be higher. So longer term, therefore, there could be impact on profitability. And additionally, they don't have a expansion pipeline in place. So the growth will drop after FY26. Whereas JSPL, as well as particularly JSW Steel, offer a consistent growth profile for 3 years.